What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you hit the subscribe button if you're on YouTube. If you're not on YouTube, if you're listening to this, go to coinmastery.com/YouTube and hit the subscribe button. Trying to get this over 40,000 on our path to 100,000 followers. And it's been a great journey. I'm excited to be here with you guys, helping everybody make better decisions and take advantage of this amazing financial revolution that is upon us. Today, we're talking about a few things. We're going to talk about what's going on in the main markets with Bitcoin. We're going to talk a little bit about some altcoin stuff, a little bit with Bittrex, some news that's been going around. And I want to talk about margin funding and its potential implications. And then I want to talk about strategy, trading, psychology, based off of something I tweeted yesterday, but I want to dive into that a little bit more to help you guys out. I think that all of these things are going to help you in one way or another leave this video with hopefully a better understanding of what's going on, and you'll go and take action on that. At the end of the day, what really matters with these videos, and really with anything that you consume, anything that you guys spend your time with. I mean, your time is the most valuable thing you have. If you're learning anything, if you're consuming anything, at the end of it, it's really helpful and really practical to either write down what you learn, and even better, write down what you're going to do about it, and then even better than that, actually go do it, or at least take a step towards it. So hopefully that with videos like this or anything that you guys are checking out on YouTube or Twitter or Facebook or whatever, try to make something tangible, even if it's just writing down some notes or a summary of what you just learned. This is, I think we're getting to an interesting point with Bitcoin. And as everybody knows, a day in crypto is, 3 weeks in regular life. So while this has only really been this kind of up and down sideways movement, this has only been a couple of days now, the sentiment switches very, very quickly, at least in the crypto community, the community that we're all in, that, we all see a lot of the same stuff on Twitter and Facebook. So it seems like there's a lot of waiting around happening right now. And the big question that I'm starting to realize, just as it relates to these markets, is thinking about the original thesis of the money is flowing from altcoins. I think a lot of it did flow from altcoins, but the more I dig into this, the more I'm wondering, what if it didn't? What if this money, what if this growth curve, and for anybody listening, I'm talking about what happened on the 10th, just October 11th through the 13th, basically, that huge run up. What if this didn't come from fresh cash, but it came from margin lending? And we'll talk about this a little bit later on. And what that would mean for the overall market if this was essentially loaned money. Right? It's credit that Bitfinex or any sort of margin platform, GDAX, offers margin trading, where you can loan money and bet against that house. That would explain certain things. It wouldn't explain other things. But what it would mean is that people bought or borrowed money to get more Bitcoin, and they're getting more Bitcoin for the forks and everything else. And they were trying to do it before the inevitable run-up that maybe they thought would happen closer to the forks, whether it be Bitcoin Gold, which is in the 25th of October, or SegWit 2X, which who even knows if that's going to happen at this point. But if it does, it would be in early November. And I think that there is a bit of trying to front run that, right, to be established before what would be the big rush, which would theoretically happen right before the forks to get your free coins. But assuming that people did do that and they used margin to do it, margin lending is not free. In fact, it's some of the most expensive lending you can do. It's also some of the most profitable things you can do if you lend people your Bitcoin. Meaning, if I wanted to go do margin trading, which I don't do, but if I wanted to, I would have to go to somebody and they would loan me their Bitcoin and I would pay them an APR, right? I would pay them an interest rate. And that interest rate is daily and it's astronomical. If you do it as a yearly, it's almost 100% APR on that money. Meaning if I was buying this margin loan, if I was taking margin out to drive this thing up, as many people do, if you're holding on to this, if you don't sell back that Bitcoin, or if you don't give back that Bitcoin, you're paying a very sizable interest rate by holding this money. So if people did use margin lending to drive this thing up and they're holding it until, let's say, the 25th or even early November, that they're going to eat a lot of costs. And there's only so much pain tolerance that people have. I mean, some people may be able to hold on to this, but when you think about, if you're a big whale, you might not necessarily need to margin lend because you have plenty of money. And if you're kind of in the middle and you do margin lend, you can only handle so much loss. And if you're just getting started in your margin lending to try to make your big shot, then you have a very low tolerance for pain for a variety of reasons. What this means is that if this is actually true, which it's hard to know, and we'll dig into why it may be, but you never know. If this is true, there's two things that may happen. One is that people may start selling if that interest rate starts to be too painful for them to sustain. And two is that money will not flow into altcoins necessarily. It'll just go back to repaying the debts on the margin loans. It doesn't mean, so people will not be trading Bitcoin for an altcoin because it's not real cash. It's credit that would go back to the house, which is just people loaning out their Bitcoin. Who knows if this will happen? I don't know, but I think that there's an overall, the sentiment I'm seeing with a lot of people is not necessarily uncertainty, but maybe that is the word. It's just like there's no clear reason what's going on here, because it's just hard to know where the cash is coming from. So what does this mean for you? Specifically, what this means is that you need to have a plan of this dropping and that money not going into altcoins. Your plan for most of you, I would say for 75, 80% of you, the answer is there's nothing to do. You just, that's it. Like you just wait until we have another cycle that's built not on margin credit, that's built on real cash coming in, and then we'll see the money flow back into altcoins. But if nothing else, I would recommend everybody have a plan. If this thing drops, I'm not saying it will, but if it does, and the altcoins do not see an increase because the cash is not flowing to altcoins, it's flowing back to margin lenders, you need to be prepared for that. Similarly, if this goes up and altcoins continue to go down, but that's, typically you have a hedge on that because USD prices go up, so you're not as underwater. But that is a scenario that a lot of people, I think, would feel that pain, right? That's what happened in July when USD and BTC goes down. It pushes the entire altcoin market down. So that's the big takeaway that I would encourage everybody is just understanding. I can't answer that for you because I don't know what your position is. I don't know what your gains and losses are. I don't know what your risk tolerance is. But that is something that you should prepare for because that's a very realistic possibility that this is not fresh cash. This is margin lending cash. And margin lending cash does not go into altcoins. Fresh cash could, but margin lending cash definitely does not. Let's take a quick look over at Bittrex. There's been some interesting pops here and there. And like I said yesterday, I'm really in a holding pattern at this point because I'm waiting for some real blood in the streets. I think the news yesterday, which is Ripple's Swell conference, is that Ripple's taken a big hit. Stellar Lumen, which is often correlated to Ripple, has actually done really well ahead of some IBM news. And there's some rumors about it becoming much more sophisticated technology that may be used in some ICOs in the future. that's been around. People have known that for a while. There's a couple coins that may use lumens. I own some Stellar lumens. You guys may remember back in the day, I scalped a bunch of this and I kept it as lumen, which has gone down a lot, but I think I'm right around break even at this point. So I'm going to hold on to the lumen for a while. The reason why is, one, I think that what the guys, if you read the story, it's like a nonprofit. It's a great product. It's insanely fast, which I always really, I just really like fast technology when it comes to payments and processing. And he's also, they're trying to do really good things in the world. And I think that as I am 100% I'm a capitalist. I want to make money. I get it. But I do think that there's something to be said in terms of the motives that get people up what's going to keep someone up until 5 a.m, making a product the best. Revolutionary spirit, and often the ability to change the world is right up there with it. It's kind of a revolutionary spirit in another way. So I like Lumen. I think you never want to buy it after a big run. You want to wait for it to come down. Let me zoom out here so you can see how it had a big run, had a second big run, and now it's hesitating, because I think that everything in the alt market is hesitating. Any of the big runs comes from either news or coordinated pumps. So I would encourage you to check out Lumen. I think it's, at the very least, it's a solid tech. Some people hate it. Some people love it. I sold off some for a scalp, but I still do own some. I think the other thing you're going to see is a couple things. One, you're starting to see a lot of random pumps that come through. And it's always hard to know if these are coordinated or if there's something to them. But typically, in uncertain times, when you see a pump that is very large, that doesn't have some big reason to it, it's usually a coordinated group that's trying to push it up and get people to get attention while there's nothing else really going on. So, it's always tempting. It's always, hindsight, you look back and like, oh man, if I had gotten co-founded yesterday, I would have made 33, just that's you don't want to play that game. It's just going to drive you insane. But I think that's what's really what's going on. I think you're going to see a lot of new coins getting listed on Bittrex. And I think one thing is that it's becoming more clear, and I'm gonna update this in the newsletter series, but it's becoming more clear that getting listed on exchanges does not have the same effect as it used to. I think everybody can agree with that at this point. I think that might change as centralized exchanges, decentralized exchanges rise up. But for the most part, there hasn't really been a sustained improvement other than when it gets listed on massive new exchanges like BitHum or some new country that previously didn't have access to the currency. That's interesting, but you can see, like with Salt and a few others that just got listed, DNT, the more liquid a price is, it's typically already there anyway. So I think that's just an evolution of market. I can tell you from the app business, this happened. This is exactly what happened too. In 2011, 2012, 2013, there was a very clear strategy where getting listed on the App Store and how you released your app and the algorithm, you really want to rank in the charts. And nowadays, there's quasi important, but it's nothing like it used to be. And I think that's what's happening here as well, because Bittrex in many ways is a marketing platform, but it's not. It's losing its steam in that sense. So think about it more of as a transaction place as opposed to a marketing mechanism. Excuse me. Speaking of Bittrex, this is a really good example of the headlines really drive everything. You want to know an interesting, or what I find interesting in marketing, in sales, it is widely, I wouldn't say proven because it's hard to prove this, but it's widely accepted that the headline of anything is about 80% of the effectiveness of the rest of the page. So what you present in the headline, the promise you make or the news that you deliver in the headline will account for 80% of what people feel, react, share, everything else. Everything else, that's what they call boiled chicken. Everything else that's in the main part of the article. And then typically there's a call to action at the end that that backs up the promise that you made in the headline. And that's what news has become. We're a headline culture. That's how it gets clicks. I mean, thanks to BuzzFeed and Upward, they really prove that algorithmic native advertising, that's what people want to click on. That's what people will click on. And this is no exception. And what happened is that Bittrex started shutting down accounts. And this article came out, I think, last night. And everybody, you probably saw it over Twitter and Facebook, and people are freaking out, being like, "Oh my God, Bitcoin! Bittrex is done, and everybody's screwed." And oh my God, like blah blah blah. And the first thing is that people did get their accounts taken down, which anyone would agree that's terrifying. The second thing, and probably I would say more importantly, is that Bittrex wasn't really saying anything, and that's not a good thing to do as a company when there's a lot of uncertainty about your company as it relates to security and especially as it relates to money. So that was a little concerning, and that really swelled the whole thing. This morning, however, Bittrex just released this statement where it looks like only 0.1% of the account on Bittrex were unaffected. Were affected, I should say. So 0.1%. 0.1%. And the reason why is because a lot of people weren't verifying their accounts, and there was some sort of security measure that they were trying to take into place. Now, Bittrex, guys, I don't know why you didn't release this statement earlier, because silence is not a good strategy in this situation. What I think it means for you guys, the listeners, is two things. One, you need to get your coins off of your exchanges. I don't know if you've been waiting. I don't know if you've been putting it off, but you need to put an hour this afternoon and get your coins off of the exchanges. If you do not know how to do that, you need to go to Google and type in wallets for Bitcoin or whatever it may be. And I'll see if I can find an article for you, but it's really not that difficult. You have to get your coins off of the exchanges. You cannot make excuses anymore. This is very much an urgent thing you need to do. Not because I don't trust. It's not even trust. It's you are your own bank. That's the price of having crypto, is that you are responsible, and you need to take accountability for that. Get it off the exchanges immediately. Okay, I'm not saying that in any sort of doomsday way for Bittrex. I'm just saying that you always want to be in control of everything as it relates to your money. Okay, so that's the first thing. The second thing is to realize that there is going to be a lot of people that take this as the end of the world and may stop using Bittrex. And I haven't done enough research to see exactly which coins this is. But you may see a lot of people leaving Bittrex or being scared of Bittrex or whatever. There are certain coins that very much depend on Bittrex volume. That may open up some dip opportunities, right? Let people get scared and freak out and go somewhere else, and maybe they start trading whatever else it may be. There may be some opportunities, some overly emotional dips, right? That's really the ones you want to buy up. The third thing I would recommend is get an account on other exchanges, right? Binance is one of the up and coming, and by no means do I endorse these. Everything has risks. I've used Binance. I still use it to buy certain coins. They seemingly have a lot of momentum right now. A lot of liquidity is going over here. But just like you diversify in your coin portfolio, you need to diversify in your exchanges. So get set up on Binance, get set up on Poloniex, get set up on Gemini and Coinbase. I mean, as many as you can, Kraken, so that you're never beholden to one exchange. You never get used to only using one exchange. And if you're just getting started, that may seem like overwhelming, but just start the process. Just start looking around. I can tell you, Bittrex, Binance, Poloniex, all of them have their faults. None of them are 100% safe. That's just the nature of the beast right now. So, but as long as you're just set up, you don't have to deposit anything on there, just have an account ready. This is a good situation in case, for any reason, hope for the best, but plan for the worst, right? That's always a good strategy when it comes to making money. Now I'm going to talk a little bit about what I was mentioning earlier about margin trading, and Bitfinex is really the name of the game because they have so much margin trading and margin volume. And if you go to bitfinex.com/stats, you can get a good snapshot of what's going on right now, what the markets look like, but also the different rates on the margin funding. And you can see what's currently happening. But more importantly, if you go to BFX data, remember we used to use this a lot. And if you go to the margin funding dropdown and go over to BTC, you can go to two things. One, you can go to live, which is a good way to go see what's happening right now in the Bitcoin markets. Just waiting for this thing to load. But it'll give you the option of doing it real time, 12-hour, 7-day, whatever. Yeah, so let's go to 7-day. And you can see some historical volume. You can see when the price spikes or the interest rate spikes, and you can correlate that to the price of Bitcoin. It's usually pretty straightforward. And then you can also see what the demand for the rates are. I'm not going to necessarily get into a full lesson on how to read these because it's pretty complicated and it's always changing. I think what's more helpful for you guys is if you go to margin trading and you go to the historic, and then you scroll down and you can look at, let's say, the last month here on the average rate of Bitcoin margin funding divided by the total sum of active margin funding. Meaning this is talking about how many people or how much Bitcoin is being lended and at what rates. And I'm covering up part of this, so I'm going to drop myself down. And when you hover over it, you can get a sense of this. And when you start overlaying this on the price of Bitcoin, you can start to see some interesting trends. For anybody who doesn't want to dive into the data, what you will start to find is that as there is more price action, there is often more margin lending. So as you see bigger swings up, more severe swings up, you start to see more margins going out for the long positions. And as it starts to aggregate towards the top of what would be a bull run, you'll start to see much more aggregated short positions. And you can always go to the sentiment and look at BTC/US dollars, and it'll give you a historical chart of how many people are shorting the market versus how many people are going long on the market. This is a really interesting place to be looking as it relates to Bitcoin price. And the reason why is because if you can find a correlation between margin lending and the price, and you can't find one from altcoins in the price, and you can do that through the coin market cap stuff, you need to adjust your plan to potentially accommodate for this bull run being fueled by credit. It's just being fueled by people taking out loans and betting money that they don't necessarily have, hoping that it's going to pay off and then they can repay the loan and they have a profit. But it's an interesting world. I don't do margin lending, so I'm not as dialed into this, but the more I read about this, right, the more I learn about this, because you got to learn everything about how the potential ways that this price came in, right? It came from, did it come from altcoins? Did it come from fresh cash? Did it come from margin lending? And those are three big ways. And margin lending is one that I don't know enough about, and I'm learning about it. But the more I learn about it, the more I'm like, where does this, how is this playing out? It makes you also wonder, like, where do these margin loans even come from if there's not enough people to loan the money? But that's in like conspiracy theory level, which it's a different conversation. Last thing I tweeted last night. If you're not following, go to twitter.com/Carter Thomas. Join me there. Try to tweet a handful of stuff every day. Hopefully people find it interesting. But I did an audit of my trading yesterday, or a loose audit, as anyone does or should. And what I realized is that all the biggest profits really came from the two biggest dips that I actually traded on. And what I mean by that, if going back to Coinbase, I'm going to scroll this out to, not Coinbase, the charts. When I look at the two biggest dips that really happened when I've been in the trading space, right? Because before this, like back to all the years before this, I just bought and didn't trade anything. I wasn't involved. I just kind of like kept it in my account and I just didn't think about it. But starting in June, as many other people, I realized that not playing the dips was just dumb. It was just stupid of me not to. And so when I looked at all my trades that I've done over the last, say, 5 months, the ones that I did in July, right? And you can go back to the beginning of the videos. It's kind of when I started doing this. Like there was some Stratus, but I mean, I must have scalped like 20 things. And then similarly, back in September, when it dropped down to like that, when that 3,100 Bitcoin order filled, excuse me, these two areas made a very, very, very good profit, like an enormous profit relative to what I would have made if I had just held through it. So I was able to amplify all my profits through that scalp trade at all. But all the other trades that I try to do, or that I did, I should say, like a couple just along the way, you see some dips here, some dips there, wherever it may be. When I added all that up, for all intents and purposes, it was kind of a wash. And it was still profitable, but I say a wash compared to holding on to Bitcoin or Ethereum or any sort of long-term thing. There wasn't a disproportionate win for doing that. It was like I got the same results as if I just held it, which is actually pretty good, relatively speaking. Like I didn't lose any, or on most of the trades, I didn't lose any money, but it was a lot of headache for not a lot of results. I did gain a lot of experience and education though. Now the good news of this is that net trading still has been a much better move than holding for me, because on these huge dips, the amount of currency that I put down on these dips was 4, 5, even 10 times bigger than these small medium trades, right? So if you trade the dips, like the big dips, the ones where everybody is staying up all night freaking out because they're not sure what's going to happen, those are the ones where you really put all the chips in. And I know if it's hard to do if you don't really have experience. And even, I'm not saying I have a lot of experience. I'm just saying that on these big dips, that's when I put in a huge amount of money. And so luckily those profits came through in a big way. And it was also with a very large amount of money, versus these medium ones where I would just throw around a little bit of cash here and there. And it just never really worked out. And so what I learned is that you guys, maybe if you're new to the channel, my strategy is I have 70% in long-term stuff where I buy and accumulate and just, that's it. I don't touch it. And then about 30% is in a dedicated trading account. So overall, it's a pretty small part of what I'm doing anyway. But it really reinforced this idea that unless you are a pro, and even pros I think would agree, it's really difficult to consistently make profits if you keep trading. It's a lot better to wait for the big dips and have a fat pile of cash waiting for that dip. Know why the dip is happening, have a plan, execute that plan, and then scalp it on the way up. And realize that might only happen once every quarter, maybe once every 6 months. But when it does happen, you can have a huge win. And when you try to force it, there are all these, random little ups and downs. It's super difficult to do consistently. It's not hard to do once. It's not hard to do twice or maybe even 3 times. But once you start to repeat it over and over, your chances, your percentage win starts to go down. It's just like it being in a casino. So I would encourage everybody, bet big, but bet on the big, bloody, freaking out, fear-driven dips, because that's, at least for me, that's what's made me the most money so far. Holding has obviously made me a lot of money, but the big bloody dips is when you actually make more than just holding, and all these interim ones, it doesn't really move the needle for what it's worth. It's just, for the most part, it's just better to just hold on to stuff. So as you guys know, this is all a learning experience. It's an incredibly fun experience. I'm having a great time. I hope you guys are too. And it's also really great to be able to share all this with you. And some people posted about how they've made plans and how they've been planning ahead, and they're starting to really walk through different scenarios, and that's awesome. And I hope it's helping everybody, make better decisions, which inevitably makes you more money. If you want a checklist for that, if you opt into the email list, I think it's on email 3 or 4 that'll come to you automatically. There is a checklist PDF. You can get that at coinmastery.com/invest. And just join in a couple of days. I'll email you a PDF checklist that you can print out and you can put it on your desk or next to your computer, which is really helpful anytime you're tempted to buy something or sell something. Just go through the checklist and make sure that it still works for you. But really kind of eye-opening when you see it with your own money. I think that's the big takeaway. So I would encourage anybody to go through and check that out, and especially when things are just kind of humming along here and you're getting a little antsy. You're like, oh man, what's next? I gotta get my hit, but patience. So cool, guys. Well, great times as always. Thank you for joining me. Make sure you subscribe, hit that subscribe button, hit the thumbs up button if you like this video, and I will see you guys tomorrow. Peace out.